SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at Bitcoin then, shall we? So I've got two things to show you here. Something, a bit of food for thought. We might be looking at some moves up, maybe today, but we'll see how this works out. So if we look at this 4 hourly, I've taken all the noise off here first of all. Descending triangle, you've probably seen this. It's obviously a very easy thing to look at. But the thing to focus on with a descending triangle is the resistance. The support is nothing. The resistance is the main thing, because with every move up, we get diminishing returns, and so the resistance gets smaller and smaller. So any gains that you get smaller. So this is one of the main reasons this is bearish formation, because the resistance changes with every 4 hourly closure. Support stays the same. We are at an area now which is getting quite close to the apex, where you would really need to see a breakout take place, if not today, tomorrow, because anything outside of that would just probably be a fake out basically. But we'll see. Now this if we turn the indicators on, we can see that it's backed up by a few things. So obviously we've got the box of significance, this box, which I like to call a box of significance. This is a daily, by the way, and we're supported by the Bollinger Band Center, also the 21 exponential. So there's a lot of support below us at this point right now. We've moved this over to a 4 hourly. We see something a little different. We are above all major moving averages, which is good, but the 200 exponential currently is where we are hanging around below. So we've got major support on the daily below us, major resistance sort of in this area here, as well as the descending triangle and the box of significance. So we're kind of in a very critical area right now, which could have dramatic repercussions whether we break out or break down. So breaking out from here would be a breakout of the formation. It would be a breakout of the box of significance. It would also be a trend forming as well, because you'd be above all these moving averages, which would start to cross in the appropriate places, offering support on the way up. So this is why it'd be bullish, because the moving averages offer support on the way up. So it's like a self-fulfilling scenario. We've also, if we look at it right now on the 4 hourly, what we see is we'd actually see the making of, not quite the confirmation of, but the making of either a trend or a pump signal on the Itchy cloud. Depends on which way you want to interpret it. So we're just getting a fresh cross now. Chiku spans below the cloud. It's also below the price action. So we don't actually have either signal now, whichever one you want to go with, because you could argue the case that this has just made a negative cross followed by a positive cross. This could be pump or trend. Doesn't really matter. None of them have actually confirmed yet, but they probably would if we were to start to close outside of this box. So a lot of power closing outside of 19,750. Anyway, it's worth recognizing that. So 4 hourly and daily looking really good. Now if we just sort of go back to the daily, turn off all this noise, just the indicators in fact, I can show you that another descending triangle that you're probably more than aware of exists on the higher term time frames. And actually when you look at this one, we've already crept out of it. Now a creeping out of it and then coming down to retest the support is actually relatively, I wouldn't say bullish, but it's an interesting concept, because if you ever follow these formations like this, trading a breakout can be difficult, because people get excited, and just like this, they'll go, yeah, we've broken out, whoa, what's happening, oh my god, bleh, dead, all the way down to the bottom. And it's when you get down to the bottom again is where you think, well, actually, now we don't have this major area of resistance above us. This is gone now. We don't need to worry about this as much anymore. So the diminishing returns aspect of a descending triangle has gone. And so if we ever do creep out and break down back down to the support area, it's these support areas which now offer a little bit more, well, reward to the risk. Because we're outside now, we've finished with this descending triangle, this one's done, and so we don't have to worry about coming back up and bumping our head into it and coming back down again. So that's your daily, suggesting that a breakout has already begun on a daily. The 4 hourly is where I'd view this current descending triangle. It's relevant on all time frames really, but it's easier to track it on a 4 hourly. And when we, like I say, turn those moving averages and signals back on, we see how relevant it really is right now. So the daily has already performed what I would consider to be a breakout of a descending triangle, but the 4 hourly is the one that's keeping us down. So formations within formations. It's like an acid trip, isn't it, really, when you think about it? So yeah, what we're seeing now is decision time. Respect the fact that we are getting a resistance now, and this could potentially bring us all the way back down to fresh new lows. So I'm not saying that we're breaking out, because we're not. Right now, we're not breaking out. And if we just turn off all this noise again, because like you say, we recognise the significance of the moving averages and the Ichimoku cloud. We recognise all of that, and all of that again hasn't confirmed anything. But one thing we can do, so I can continue with my crypto clickbait, is think about a measured move. So if we were to break out today, over time, so this isn't, in our dreams, this is what the candle would look like. But over time, if we were to break out from here and we were to remain above 19,750, we'd be looking at a measured move up to around 27,000 based on the measured move of this formation. Never mind the measured move on the daily, which would obviously point us up to a new all-time high. So measured moves from formations that's crypto clickbait for you. But for the moment, we've not broken out. So let's recognise that we're still within a bearish formation, getting a rejection on the resistance, and we've not got any signals that we can go by to say, okay, this is interesting. Let's make a position in this, or a futures position at least anyway. So let's turn our attention to the bigger picture, which is obviously really boring, but it's the Dixie. So yesterday we were looking at the Dixie going, okay, pullback is probably going to happen now, especially with what's going on with the British pound. Not that it has an enormous amount of influence, but there was a decent move ready to work yesterday, and it worked. But I'll get best part of a 2% move yesterday on cable. And that, I said, was, when I was talking on the Telegram, I said, look, it's probably going to keep the Dixie either static or maybe a little bit of a pullback. But when you look at the Dixie, it's a very clear way of playing this. It's just a buy the dip opportunity, isn't it? Buy the dip. Weekly 10 exponential is pretty much the best place to think about it, which currently brings us just around 110.90, almost 111. And if you were super optimistic, you could think maybe we'll break down to 108. Because your Bollinger Band Centre, which has happened as well on the move up as well. So there is a chance that we do get these pullbacks, but for the moment, we're halfway done, more than halfway done, about 2/3 done on this pullback. So let's have a look at the team which has done this, which has allowed for this. First of all, is the pound. Pound coming back up to its major area of support resistance, which is just short of about 115 really. 50 simple moving average, 50 exponential, plus a horizontal area of significance. A breakout from here would probably take it a lot further up. I'm not joking about that. So, I was telling people who wanted to know about, because most of us have been sitting in dollars and we've been enjoying that because obviously we live in England or the UK, where we're subject to wrecked city. So it was nice to know. I said last week, I think the pound's going to have a little bit of a rally now, maybe up to 115, and maybe if we break out from there, probably a lot higher than that. It's not a done deal that we're going to parity straight away. Parity is on the cards, but there is a chance that we make our way back up into the 120s with a top target of about 126. I know it sounds crazy to say that, because we are expecting parity at some point, but it's not crazy. I'm telling you, it's definitely not absolutely crazy. It could definitely happen, and it wouldn't happen overnight, but it could happen quite sharp and quite fast, and then the sellers would come back in, because the obvious scenario for the pound is back down and probably into parity and below. But there is a very realistic possibility now of a decent rally on the pound versus the dollar, and that could be enough to start the Dixie breaking down to at least the at best, I would say, 108. So that would be good for everything, and that's the good old British pounders doing that. But right now, I don't recognise resistance here, but it's not a done deal. I think there is a chance that we break out and actually start a bit of an uptrend into the 120s. We'll target 120, 123, 126, and the euro most likely going to follow that. So the euro's actually reclaimed this Bollinger Band Centre. Got a bit of an uptick as well on the daily here. So the euro looks like it wants to reclaim parity as well. Now parity is the new normal for
the euro. So it's unlike the pound, which is subject to a lot of politics at the moment. The euro is subject to a lot of bureaucracy, and so everything about the euro is slow. It's just a slow bleed out, really. That's what it is. And so the euro has much greater effect on the Dixie, because unlike the pound, which is subject to 4 countries, we got many. What was it 26, 27? I don't know. That are all using the euro. I don't think it's that many actually, is it? I don't really know, but there's quite a lot more. So as a block, the euro is used by by many more, and as a result has a much greater effect. It's the greatest effect on the Dixie, but unfortunately it's not got the possibilities that the pound has got for such a significant rally. But it might move through association with that, and so we'll be looking for parity to be reclaimed ever so slightly, and probably sell off around that, just a little bit above that. So again, parity is the new normal. Building a base above parity would still be good. We might go into a rally, but I doubt it. I just doubt it. I just don't think it has the fundamentals behind it to allow for something like that, unlike the pound, which is basically it's all over the place, as is the UK. So that is the situation, and that in itself should at least bring this Dixie back down to the 10 exponential this week, and see where we go from there. If we bounce from there, that's what I would expect, just based on this chart and the charts in general. But if we break down as well, we'll be looking for another buy the dip opportunity on the dollar around 108.2, 108.3, thereabouts. So the reason I bring all this stuff up is not to bore you to death. Is to tell you that we all recognise that the dollar, the strength of the dollar, is the major component to all charts moving, and so when you break down, I suppose, just those two, which are the main components to the Dixie, then we think, okay, as far as the financial weather report is concerned today, we're looking for calm breezes in the market. If the market decides to go down, it does it completely on its own, and it doesn't do it because of the Dixie. It does it on its own. And so if we think about what we're looking at now, we'll just turn ourselves over to the S&P. So we broke down from this formation. It's a symmetrical triangle. Broke down from that, found ourselves in a falling channel, and we're at the top of that falling channel now. If we break out of the falling channel, this is a bullish move, and we could expect maybe a move back up to around 4,000 on the S&P. This sounds ridiculous, I know, but it's a possibility. These are bullish formations. When you get a breakout from one of these, you get a tearing up move. I'd expect the tear up move to take us up to this ascending resistance here, which currently sits at 4,000 and beyond. We've got bullish divergence brewing on these. We've had some good moves recently as well in traditional markets, and so I would look at this as a breakout possibility. The reason I'm talking about the S&P isn't to bore the pants off you either. Is to tell you that obviously we recognise that all these things like Bitcoin and traditional markets are very much tied together. They're heavily influenced by the Dixie, obviously, which are influenced by the pound and the euro, and so there's a chain of events. It's like a domino effect taking place here. And what we're looking at on Bitcoin and on the S&P is that we're sitting at major resistance, and if we were to break out from here, we would get a relatively decent move. If we were to trend this move up to this area here, we're looking at a 10% move on the S&P, maybe even up to the top of this one, so we're looking at 13, but definitely I'd be saying measuring around 10% move from a breakout from here. 10% on the S&P, you could equate to at least a minimum of 10% on Bitcoin. If we measure a 10% from Bitcoin from here, we're talking areas of about 21,000, 22,000. Normally, you would expect Bitcoin to obviously, I wouldn't say double, but emphasize any move on major indices like the S&P. So if we did get a big breakout from that channel on the S&P, you'd expect Bitcoin to do more. So 10% minimum, but overall we'll be looking for breakouts and more breakouts across different charts, really. So there is a very, very good chance that we do break out from here, but until we see the breakout and can confirm it alongside some signals as well, and again, signals generated on the 4-hourly suggested certain either pump or trend signals on On Bitcoin, the situation for the daily wouldn't confirm any kind of breakout pump signal on the itchy cloud until much higher, until in fact 10% higher than where we are right now, which is basically that measured move takes us up to the top of the cloud. That's a 10% move. Closures above this cloud, so we'd have to close above 21,000. We'll call it 22. Should give us it would actually only give us a pump signal, but that's enough, and that could take us up to around 25, 26. Fair enough. I like that idea. I do like that idea, but recognize this. I'm not saying that this is going to happen, because currently we're smacking our head on the resistance, aren't we? We're doing nothing but getting rejection at this very moment in time. So, like I say, I do favour this kind of situation, but we have to recognise that right now this is a crucial area on Bitcoin. It's a crucial area on Nasdaq, on S&P. But the odds are in the favour of these charts breaking out, as we've recognised with Forex, that actually, despite these being at resistance, fundamentals seem to back up the pound. They favour the pound and the euro ever so slightly for further upside, which means a little bit more downside on the Dixie, which only encourages further upside on indices and crypto. So I would also make the point before I go now that Bitcoin is the one that's moving here. Altcoins can move, they can drag their feet. Some will obviously go higher, some will not move as much. This is all based on Bitcoin, and Bitcoin is the major crypto. It's undeniable, and where all the interest really lays, really, in these sort of moves. You can try and trade certain altcoins within this environment, but they'd have to have a good setup to warrant actually trading them. One that I'm looking at still is eGold. We've spoken about this on the Patreon live streams. I do like the look of eGold, and the reason for it is that we bounced from the pullback on 4 hourly quite nicely. The golden cross dumped into it, ricocheted from it, made a new high yesterday, and so now what we're looking for something like eGold would be a closure above the cloud. So we'd want to see closures really above 59, we'll call it, and then we would get a pump signal which could take us into the up to 80 thereabouts, upper 70s into 80s. So there's certain things like that which offer opportunity and potential promise as far as altcoins are concerned. There'll be loads of them. You just have to find them yourself. But again, excuse me, still got a bit of a cold here. This isn't confirmed either. So what we're looking at now is pushing through the resistance on S&P, Bitcoin, and pound and euro to allow for continuation for what could be, decent moves. We're talking 10, 20% on some of these charts that we're looking at, whether it's an indice like S&P or Bitcoin, which could be 20%, or something like eGold, which will measure this. What would that be? That'd be a best part of a 40%, close to a 40% move. So there is definitely some big moves brewing, and they are, they are right there in front of us. We just have to monitor the process over this next 24 to 48 hours and see where we go from there. So there is a potential really big move brewing to the up, but currently as it stands right this very moment in time, none of this is confirmed, because we're getting rejections on all of these areas. Rejection on Bitcoin, rejection on S&P, rejection on pound, and euro is basically just doing its own thing. But it is very promising. We just have to keep our eyes on it. That's all I'm saying. So before you get too excited, recognise that I haven't declared pump. This is only the morning now. I haven't declared pump yet, but I will be close to declaring pump soon. But just monitor the situation, all right? Anyway, thank you for watching. I know it was a long rambling video, but I hope you have a nice day anyway. Doing the live stream tonight for people who are members of the Patreon. If you're not, there's a link in the description. 2 live streams a week, and 2 hours a pop. £7.50 a month. Can't complain with that, especially when the pound is wrecked. This is the time to spend those pathetic pounds. Anyway, have a nice day. Take it easy.